Yo everybody, Goblin here. So I was checking out this test sim I got. This is a 72-hour recording I made, and it's got some real interesting behavior that I wanted to showcase to you guys. It would give me a chance to explain a lot of the algorithm's new behaviors to you. As well, it even recorded some misconceptions about machine guns, so I thought this would just be a wonderful chance to speak to you all. And so, here we go. Really funny buy at the top. I'm going to go ahead and pause this right now and talk to you guys about why it did that. Why did Machine Gun buy at the absolute peak on Bitcoin when it's running there? Well, that's because we're in the world of short-term technical analysis now. I want you to look over here in this buy conditions, and then look, see how these are turned off? These are the orange and blue technical analysis. This is long-term technical analysis. The gray is short-term technical analysis. You see this new thing called skim buy and skim sell? If skimmer is currently active, we're probably tossing out long-term technical analysis. Why? Because we're skimming. So how do you get into skim mode? Let's just stop this recording for a split second. And I really want to talk about this. Let's flip over to the new settings menu. This is the new version settings menu. There's over 200 unique settings that you can play with and change and tinker and customize as you wish. Right down in here is the new skimmer management, and this really can turn Machine Gun into a beast. And so we have the standard capital stage system, so you can control when it turns off and on by a capital stage, but we also have automatic activation, and you can see there's really nice tool pop-ups for all of these. I've went pretty much and put a library in here with all these little tooltips. Anyways, automatic activation says if you have not acquired X amount of your bag, this is a percentage, so in this case 20% of your bag, which also is the first two capital stages of Machine Gun, since capital stages are done in 10%, it will automatically turn on skimmer buy. What does this allow you to do? This allows you to get really aggressive, like really aggressive with the beginning of your bag. And this directly impacts your profits because you're no longer waiting for long-term technical analysis to occur to decide when you should buy or when you should sell. So you can see over here when this turns on, long-term technical analysis turns off. Now, how else do you get into skimmer? Well, skimmer mode can also be triggered by the sensitivity setting. What this does is it looks for total top to bottom market travel, market distance, and if the distance of market is oscillating, has not exceeded what you set here, in this case 3%, it will turn skimmer back on because it's realizing it's in a very tight market condition. The averaging period on this is 48 candles, and so we run every candle in Machine Gun. We use a period of 5 minutes. And so this right here is 4 hours of technical analysis. You can go ahead and pull this, all the way to 96 and do 8 hours. And we stop there because if you take, say, 96 plus the 1, a lot of offsets we run 3, you'd have 99. And on a lot of exchanges nowadays, 100 candles is about what you can expect to get returned. I mean, some of them will give you thousands of candles, but some of them only give you 100. So we base a lot of our technical analysis off of 4 and 8 hour periods, but you're welcome to come in here and just change everything. For instance, let's say you don't want to turn off KBO when skimmer is active. Well, then you can just change. Do you want to follow KBO's plot line? Do you want to follow KBO's signal line? Do you want to turn it off completely? This is all up to you now. We also control a lot of other things like unit cost sensitivity and partial gain. These are systems that pull extra profits out, but because we're in skimmer and only considering short-term technical analysis now, there's a lot of things you can change here. For instance, the buy systems are turned off for long-term technical analysis, but if you turn them on, for instance, let's say I wanted to follow the indicator line, well, you can also control the anti-lag period separate from the normal anti-lag period when you're in skimmer. So you can consider long-term technical analysis, but then validate it or invalidate it in a very short period of time if you're not getting the aggression you're looking for. You can see in the way we currently have this set up, it just turns off long-term technical analysis completely. So let's get back to that recording. Here's the time lapse. It bought at the very top. Why did it do that? Well, as you can see, long-term technical analysis, this blue and orange, it's saying no, do not buy right now. Short-term technical analysis, watch this run come all the way up and then slam at the top down, and it allows the buy chain to light up. And so you know that's about the peak because you saw this instant reversal. Now I'm going to let the time lapse go now that we can explain why this cheeky buy right here happened, because previously that would have never happened in a machine gun build because it looks funny, it's very dork. But wait for the new level of aggression to hit. Let's go back to the recording. Here it is buying and buying and buying and buying, and then the markets continue to drop, and so it's giving you a waterfall. And then if I would have zoomed in, you guys could have really seen the wicks, but this is about the level I wanted to zoom to when I was recording. Here it's buying the heck out of the dip, and I'm actually going to pause this again, guys. I'm going to be a pauser here because there's so much behavior to speak about. This right here, look, it's buying into the dip very aggressively, and then what is this? That is an attempted swing trade. I've been talking to you guys a lot in the Telegram channel about how I've gone from trying to perfectly nail dips to accepting when the market is oscillating back upwards and trying to accumulate more in a swing trade. You're going to see this happen a lot because long-term technical analysis is still turned off. You can see it here, it's turned off. And buy conditions, you can see that's a nope, this is a nope, and it's in a waterfall. It means it's a nope, which means you do not have buy enabled. Until all these turn green, orange, or blue, and we can go through all those colors, but basically, are they all green? You get buy enabled. If you're not seeing buy enabled, there's something in this list right here that is keeping you from buying. So you can pretty much look and know exactly what machine gun's thinking. Let's go ahead, get right back into this again. Here's waterfalling. You can see the waterfall's already been triggered. Let's get back into this with the swing trades. I can't wait to show you guys these funny swing trades when you're in short-term technical analysis. Like, well, for instance, see that buy right there at the top? That was an attempted swing. That is not an out-of-place buy. It thought the markets were coming back up. And look, here it hit the dip, and then it thought the markets were coming back up. So it's swing trading in machine gun style. And over here is percentages. You can see how tight of a market this is. The difference between right here and right here is like at best a tenth. And so this is a beautiful dip hit. This is a beautiful dip hit. Bitcoin is running in this video when I started it all the way up. And you'll see it didn't buy, it didn't buy, it didn't buy, it didn't buy. It made a really funny buy. Because here's where it starts to think that the price is going to stabilize. And most of the time, you don't advise people to start super aggressive bots attempting to skim at like market runs at all-time highs. And let me tell you, you can go back and look at the charts for this day. This was getting to all-time high right here. So this is a really great torture test. Before I continue on with this video, I always advise people to come with extra steps if you're going to trade one of the big coins. Like Dave the other day called it the king coin. If you're going to trade Bitcoin, I tell people, and I think this is a great explanation, it is literally like trying to turn a cruise lining ship around constantly. Are you on a cruise liner? Is it constantly trying to turn around? You can see the pace of this market. And so since it takes so long to oscillate, you need to come with extra steps so that you're prepared to accumulate through prolonged market depression oscillations before it pops back up high enough for you to start profiting and exiting your hand. This test is very funny because I start my tests when I start my tests. You know, I don't try to cherry pick them. Though I started this test, started the recording, the markets just run to all-time high, and then I get to watch the brand new machine gun release candidate, just go nuts. This is a 1,000 step recording. This is $5,000 stretched out across 1,000 steps. What does that mean? That means that this is what we consider high risk. We always recommend people start around 2,500 steps. I know a lot of people in the community love 5,000 steps because it allows them to buy such large market depressions. And then I know like basically every freaking whale in the community runs 10,000 steps. they have a lot of money to stretch out across those 10,000 steps. So it's kind of important you keep this in mind. If you're stretching $5,000 out like this test is, 1,000 steps, that's real aggressive. 2,500 steps would be much safer, but you would not make as much because you're running at a much lower risk reward ratio. And so this test is trading Bitcoin, which I'm always advising people maybe not do, maybe get a little bit of an easier market to trade. And it's trading Bitcoin at 1,000 steps during its all-time high for this trade day. You couldn't really specify a better torture test. And so I can't wait to get into this with you guys. Let's go back to the recording and watch it little swing trade as the markets oscillate. You can see it's kind of dancing right at unit cost. And our unit cost protection has an anti-lag on it. You can buy above unit cost. By default, we wait about 2 hours. Completely configurable. Now look at this ridiculousness. Here's Bitcoin just shooting off for the day. Let's refresh the charts here. I'm going to refresh this to show off a couple things. And I'm going to pause this video. First off to show, it completely raided its entire hand. People have a common misconception is that machine gun in moon mode right here will not empty its entire hand. And it most certainly will. We can even go into that. What setting controls that? Let's go over here. Let's go to general management. Do you see this minimum partial quote balance? Put a little mouse on that. This fixes what I call ghost quote inside the step grid hybrid strategy, the underlying strategy that we manipulate with our autoconfig file. If you change this setting, it will take whatever you've put times the minimum volume to sell at your exchange for your particular pair here. And anytime it's below that amount, it will go ahead and exit its entire hand. And this prevents it from building up quote where it's partialed off the entire bag and no longer has a unit cost for remaining quote. And so you just keep building up this ghost quote forever. This will fix this. And so here on Coinbase, the minimum for this pair is probably like $1.25 or something. And so 10 times that. And so anytime we're at like $12.50 or below, it'll go ahead and just exit its entire hand, close it up, clean up the order books, get everything back moving along nicely. And it's really important to clean up your order books as often as you can. So let's go back to this. Here we have exited our entire hand. You can see we have no Bitcoin, just USDC. Over here, if you are part of Coinbase One or an exchange that offers a fee rebate program, you can see what type of rebate you're getting. That is not calculated into the profits. The profits are just from trading. So this would be extra money you would find in your account. Here's the first part of that run. Look at these trades. Why am I bringing this up? Machine Gun has for years been a sub-percentage strategy. And when I say that to people, they just think that it will never exit above a percentage. And that's not true. We will exit at the optimal peak, the best time that our technical analysis can figure out. It doesn't really matter if you've been 2% or a quarter of a percent. If it thinks that that's the time, it's going to pull the trigger. So this is a beautiful offload on that huge run that Bitcoin took. You can see, look at these returns with 2.31% being the best it did. And you can see the times. Like here's a minute, here's another minute, here's later in that minute, here's almost in a minute later, and then here's closing up that minute. And so it waited for the market to mature as it was pulling the trigger on these exits. So look at this, up here on the wicks, and then it detected the markets was starting to come down, and so it decided to exit its entire hand. Here it pulled 2%, and then on the last little tiny bit of its bag, it pulled 1.88%. Now, why did it do that? Well, as we talked about in the previous settings, let's flip back to that. Anything below minimum volume to sell times 10, it would get rid of the entire hand. This was 973. Well, that's below the 12, and so it got rid of its entire bag. Cleaned it up real nice. This is a nutty run. Remember how big this part looked? And then it looked like it was just getting right in there at all-time high, because it was getting in there at all-time high. Short-term technical analysis said, that's great. Look at this long-term technical analysis. It would have never let you buy. KVO would have let you start buying right right about there and right in here, but the rest of it would have invalidated that and stopped the buy logic chain. You might have been able to pop one right here, which is right there on the charts, but because MACD wouldn't have let you, if you were considering all the long-term technical analysis chains, you would have never bought this dip. It would have never happened. Which means this whole run right here would have happened, and you would have had nothing to spend on it. And so here you've made $9.86, and you've been running for not even a quarter of a day because it oscillated on short-term technical analysis, and then Bitcoin did something insane, which cryptocurrencies do, and it decided to run, what is that, 2.5%? Just out of nowhere. You can see my internet had a hard time catching up with it. Now you can see that in moon mode, we do exit our entire hand, and that you can control that yourselves. Let's get back into this. Once again, you can see the gray short-term technical analysis just starting to favor getting back into this market. And oh, you know what? Something I want to pause for a second. Remember this ridiculous buy over here? How it was at the absolute peak all-time high for the day? Yeah, it doesn't even look like it was that far off the dip anymore. Because right here, this occurred a little bit over 2.5%, and then the dip came down to 2%. There's 0.5% of difference for all of this market time. You were riding the thinnest markets ever. And then, boom. Could Bitcoin have went down? Yeah, it sure could have. But it didn't. It ran up. So it made these exits. And here it is, once again, short-term technical analysis, just getting into this market, which I absolutely love. Let's get back at this. Here you can see the heavy accumulation, and it is hitting the very bottom of those candles and a ton of wicks. But you'll see at this aggression level, it's more about accumulating inside the channel than it is at any given exact bottom. And I love the swing trading, although you can see those are at the bottom of the candles there. The swing trading mechanism occasionally results in some what I consider funny buys, but it's 100% worth it, like right there. That's trying to ride a swing trade up, but it's going to just keep oscillating because this is such a tight market anyways that it wants to get in there. It wants to lower unit cost. That green line, that's your unit cost. And so you can see it's going to dance right below your unit cost. And it's not to say that we'll never buy above unit cost. We do. Look at that funny little exit it made when the markets started to drop, and it feared that the markets would drop harder. And then it was like, no, the markets aren't dropping. So it got right back into another accumulation. And then right here's that accumulation into the upwards release. Now, because this is all time high, it's slowly letting go of that bag constantly, because it's not sure if it's going to maintain these all-time high runs. Look at the technical analysis down here. Here, it could not get into this dip fast enough because it still wanted to offload this bag at all-time high. And so here, it actually let go of some more of it on the way down. But then it wanted to get back in for the swing in this dip, and so it actually bought it on the way up. I cannot express enough how important the new skimmer is, because it allows you to be so aggressive, even in situations like this where you're watching the markets run. And let's look at this. This was the run that was ridiculous before, and then accumulations, almost like at the start of this, right into it as the market continues to run. Generally, if you're running any sort of skimming, this would be a pretty dangerous place to be because you're throwing a lot of money around at market all-time high for the day. Though machineGun is so advanced in stacking and layering orders at these trading phases, you can watch the trading limit change. You have the ability to hit over 20 different trading limits at any given time. And so it layers the amount you're spending for maximum drawdown of unit cost. And so I'm actually not really worried about this torture test, even though it's literally just buying and oscillating at all-time high for the day. Let's get back into this. I really want you guys to see this behavior. So here it's stopped accumulating, but it immediately picks it back up because it thinks the markets are going to continue to run. Now, at all-time high, you're eventually going to have to come down. It can't just stay at all-time high all the time. So you can see a little tiny waterfall right there. It basically just wanted to buy this whole thing. And then as the chart snapped, you can see it actually got into that dip real nice. And then the new swing trade mechanism, it came up and tried to buy the next part of it. And as you can see, I really like this because it buys the entire dip instead of just trying to put an order right here. It lights it all the way up. Same thing, beautiful waterfall down into an attempted upward swing. And then because the markets are so tight, it goes ahead and extracts more profit here and then gets right back into it. And here it's just stacking them because Bitcoin just wants to keep flying. These exits right up here at the top, pulling in 1808 and you haven't finished a trade day yet.
Machine gun money!
You're still holding a very small bag, about 10%, and then it's going to go ahead and keep, you're literally not holding a gigantic bag, so it's going to eat this up because you look how much it's dropping unit cost. It's dramatically dropping unit cost. So this is a waterfall into a reaccumulation, and you can see I thought this was going to be fine, but then the markets dropped. It's going to happen, guys. And so now you can see it actually ate up that dip really nice because the markets are going to oscillate up. Oh, right back down. Beautiful waterfall protection into heavy accumulation here. I love it. If you could actually zoom in, you'd see a lot of those are wick hits. But right here, that's an attempted swing into the dip. Waterfall down. Beautiful hit on the dip there. And then right here, it was not going to do it. It thought it was going to swing trade up. Markets came back down, and it lit up that dip again. Markets come back up. Look at these exits. Beautiful exits on the wick there. So let's talk about that. Look at this, 1863. You're not an entire day in. You are sitting, at capital stage 3, which means you're getting into the 20 to 30% of your bag range, and you can see that accumulated right there, which will, obviously switch as the price of the asset changes. We are still living in short-term technical analysis. It's incredible. It's incredible. Anyways, back to it. Look at this market drop. It tried one trade, and it started to eat up what it perceived was a channel. And then right back into it, heavy accumulation. If you slow this down, you can justify every single buy it's doing, but because it's moving so fast, it's hard to just check all the TA on the screen. So here you go, waterfalls where it thought the market was coming back, waterfall, tried an attempted swing trade, and then bought the final dip, and it bought that dip hard. So with the markets coming back, even though we're under unit cost, you can see it's just laying out that bag. It's just picking up extra profits anywhere that it thinks it can, and most of those are wick hits. I love it. Right back into a really nice heavy accumulation. This new version is so aggressive compared to the past versions. And once again, you're totally welcome to come in here, turn back on long-term technical analysis from the get-go and not be so aggressive, though I think your profits will really appreciate this newfound level of aggression. Also, we turn on and off this long-term technical analysis for a lot of things. The reason you're seeing it disabled at the moment is because we're just living in short-term technical analysis. We're loving it because unit cost is right here. And then I want to go ahead and pause this video for a second. Look what's happened here. Our bag value grew for over half of our money that we have available, our investment level. This thing flipped over to DCA mode. And because it's so close to unit cost, it actually changed to close override. What does that mean? When it's gone DCA mode, literally dollar cost average mode, it is just trying to pull down unit cost to where it's right above where you're buying. And then with the next market oscillation up, it wants to rid its entire hand. This is another moment where we're going to go ahead and clear out the entire trade sequence. And why would we do that? Well, 50% of your bag spent. We're starting to get a little worried that this whole skimming the unit cost thing is getting us off track. We can't start making big money plays because we're halfway invested. And so dollar cost average turns off partial exits. You're going to see, look, Forever Bags is turned off. If you're big into step grid hybrid or any of the step grid strategies, you know the magic that is Forever Bags. And so now we've turned that off, and it's not going to let go at these peaks. It's going to keep investing, keep accumulating until that there's an oscillation that comes up where it can bring back home your entire hand. What does that do for us? Let's talk about that for a second. What that means is that all the quote that you bought above this green line, that's out of position. That is stuff that is no longer able to be sold at a profit. Matter of fact, you're taking a loss on it. We're dragging it down via buying all this stuff below unit cost, below the green line, so that when the markets pop back up, there's a calculation ran that says, can I make more money selling all this stuff below unit cost than the losses I take getting rid of the stuff that is overpriced? If you can gain profit and completely close your entire hand and you're in DCA mode or close override, it will do that. It's not trying to find the absolute peak spot to partial out or drop a good part of your bag. No, it's saying I'm in profit. I can close the entire trade sequence. I can get rid of everything I own that's overpriced. And then I can get back to trading in moon mode with all my money back at the new accepted value of the asset I'm trading. So if you're riding, like in this case, all-time high for the day, and then the markets drop because it can't maintain all-time high all day, well, you're going to just use your money to buy safety. And so you're not going to see exits now. You're going to wait until it can pull the whole hand back. What does that mean? Well, trading a really slow market like Bitcoin over here, where it can tighten up and the markets just won't move for days, you might keep buying right underneath unit cost for a couple days. It's completely dynamic to the markets. Or it could swing right back up in 15 minutes, bring your whole hand back, and then you get back into moon mode, being able to trade and make aggressive trades because you have all this money open. I wanted to explain that because we've already seen the script completely return its hand in moon mode. But now that you're in dollar cost average mode, I really wanted to explain the difference because it's a misconception that the community has. A lot of times people contact me and they ask, well, why did it miss this beautiful peak in dollar cost average mode? Well, it's not designed to hit that beautiful peak in dollar cost average mode. You can think of DCA and close override as risk reduction modes. Yes, they can make a ton of money. Yes, some people only run in DCA mode. They turn off moon mode completely. But the point of them is to get you out of a risky situation. It's to say, hey, the markets might not ever oscillate back up to where you have over accumulated. And so to be able to come in and clean your entire trade sequence out is so important. That risk reduction is greater than any profits that you would have gained by waiting longer, because you don't know that the markets are going to give you another opportunity to return your entire hand. And guaranteed, getting back into moon mode with all your money and making really high risk, high dollar trades while you're oscillating the new value, that is what Machine Gun is supposed to do. So by being able to pull you out of the fire, so to speak, and get you back into moon mode, you're going to make more money. So if you see it make a return and then, the markets continue to run and you're like, wow, I really wish it would have held onto that bag longer, you're looking at it wrong. What you were able to do is reduce risk and pull yourself just out of a bad situation. That should always be valued. Like, that is beautiful. I love that. Machine Gun 4.2 didn't have anything like that. 5 has multiple ways of getting you out of trouble. And we'll continue to watch this play out with Bitcoin here. Let me go ahead and just turn this back on. Here you can see it just right back into that aggression. I think it's funny when my mountain internet here kind of chucks out. You can see it does a great job even, and we never recommend anybody trade on their home network, but for running these tests, I need to. It does a great job for flaky internet out here. And so here it's bought the dip. It's waterfall down, just beautiful waterfall here. And then it thought a swing was going to happen. It didn't. And so it just bought the heck out of that. And you can see it came up, waterfall down, bought the heck out of the same channel. You can see it waterfall down, bought the dip. It did not hit the wick all the way across the board, probably thanks to a timing issue. I can't blame my internet for everything. Sometimes Machine Gun's just cycling and the markets move so fast that it just can't nail that little dip. But look, it did a tremendous job hitting that dip already with a ton of orders. Came up, came back in, and it thinks that the markets are just going to hang, so it started to accumulate. Obviously, the markets didn't hang, and so it started to waterfall. Here's a swing, here's the dip, here's the swing, and the markets are back up. And so really funny behavior there with the new swing trading mechanisms. I love it. I love it. But I thought I'd have to explain to you guys why it does this different behavior on its accumulation cycle. Here you can go and see it's just eating up what it thinks is the pre-run. And then you can see the short-term technical analysis saying, in fact, it is. And so then it comes back in and it detects that, man, you're just not that far from unit cost. It really wants to get your hand back. And so here it's buying on the way down. It waterfalls. It buys at the bottom. And let's pause this for a second. Look at this. This is right above 0.2. And this doesn't even make it to 0.1. Look how tight that waterfall drop is. These markets are not oscillating much at all. There's not even a percentage of travel in these markets. Let's go ahead and get back into it. Here you can see waterfalling down. I mean, and I love seeing that over the years, the waterfall detection has gotten really good. We've continued to work on that for a long time. You can see the wick hits, wick accumulations, and then just a candle let it accumulate where it was previously a wick. Attempted swing here, and then it didn't happen. Wick hit, down almost a wick. Wick hit, wick hits at the very bottom. It loves accumulating at the very bottom, but in very Machine Gun fashion, it loves to accumulate a lot, which is that dynamic bag building that really sets us aside from other strategies that use presets amount that it invests at any given time, because you're always going to get a completely different amount. So here it is, running all the way up, tickling unit cost, popping over unit cost, but it just wasn't enough to profit, because look at where your unit cost is, even that. Let's pause this. Look at these huge wicks. Look where your unit cost is. It could not pull even 0.25% of profit out of this situation. It didn't want to attempt to do it because that's just not enough money for how much you have invested. You have $3,300 invested here. And so just to bring it home for the fact of bringing it home, it's great risk reduction at that point, but you didn't make any money, which makes all this trading pointless. And so, I mean, outside of the risk reduction, I don't want to do that. I want to make money on all these orders so that you're going to watch it dance on unit cost here, and it still won't get rid of its hand, because there is a certain part of risk reduction to profit ratio that I'm putting into consideration here. Like, you always make money when you trade with Machine Gun, but it can be picky on these very small, like right there. Could it have returned the entire thing plus fees right there? Yeah, but you wouldn't have made any money. So we're going to watch this thing oscillate and continue to accumulate until it absolutely is either getting close to bag status, which we consider a failure. You should never be bagged. And that's the biggest thing about running these really high risk levels, is that you're basically running the risk of temporarily holding a bag. That's what this bag risk is trying to tell you, is that, like, hey, you might end up bagged. 1,000 steps, that's pretty aggressive. So let's go ahead and see what it does for its time. But it won't it will not pick a very small time period like this to bring its hand back unless you are significantly bagged. Like if you're getting really close to running out of money. Up until that point, it actually wants to continue to just make good returns. And so I'm going to let this go ahead and play out, because there's more sophisticated behavior here than a lot of our user base understands. And it's not about reading the 100-page manual or watching my 90+ minute videos all the time. I think a lot of it can be explained in a shorter run where you guys can actually see it. I can pause it. Like, I'm really hoping this is a good educational tool for everybody. So let's get back into this. Here's another thing, actually. You're going to waterfall down. Obviously, it's right below unit cost. And you can see that as you start to accumulate bigger and bigger bags, it's harder to influence overarching unit cost, because we are bringing down how much we can spend at any given time, because we're getting deep into the capital stage system. So the number of trading phases it has to pick from went from 10 to, in this case, 4. And so the higher ones being bigger spending limits. Here's trading limits, so it's accumulating, right? But it's just not spending that much because it's really trying to stretch your bag out. How much impact you have on unit cost is going to slow down the farther into the capital stage and trading phase systems you are. And so this becomes about long-term buying the dips to where you're actually getting really good unit cost reduction with some of these bottom purchases. And then right here, look at that. It literally bought those right at unit cost because it was thinking the markets might come back up, but they didn't. And so it's just going to waterfall all the way down. Look how tight this is. This is 0.5. This is 0.1. And so literally that's the difference of hitting this. That's how hard that was to hit because these markets are so tight. Trails can even take up that much space. Here we are heavily buying this dip. Let's take a moment to talk about this risk tuning. I talked about this in the past. This is like a good deal, bad deal system. That's like that's the best way to explain this to people. So what's happening here is risk tuning. It's drawing an average across the screen and it's looking for if an asset is overpriced or underpriced based on over 8 hours. If it's above it, it's going to run a different risk tuning than if it's below it. And these change by mode. So here in DCA mode, it's below average price for this asset. And so it wants to buy again. It's not happy with just buying the normal trading limit. It wants to go ahead and buy 1.5 times the trading limit. Up in moon mode, it would be doubling. It'd be doubling down. It'd be doing 2 times whatever your current trading limit is. But when that swings up above the average cost, and so therefore it's overpriced, you'll see a heavy reduction here. And so moon mode would be like, I don't want to buy double anymore, it's overpriced. And so it would just buy, the normal amount. But here in DCA mode, because things are a little bit different, we're heavily invested, it's going to actually not even buy the original amount. It's going to buy 3/4 of the original amount. So this would say like 0.75, and your trading limits would be reduced. Well, it's doing that because you're not getting a good deal on the asset when compared to the historical price over the last 8 hours. This is another way we layer. And so if you're up above and you're watching the markets run, we're not going to let you spend as much because that's extremely risky behavior. You're at the very top of the price point. It's not worth what you're spending, but you want to have skin in the game. And so we're going to buy less while markets are running up. And then the second the markets come down and get into an actual depression, well, we're going to buy a lot more. And so it's not just about the trading phase system having 20 different trading limits you can hit. You can dial in risk tuning and completely change how machine gun works. For instance, what if you just wanted to buy 10 times the amount at the bottom? Well, you can do that. Once again, 200 plus settings. You're welcome to tinker and customize as you want, although we dial in presets so that all you need to do is put in one setting, investment level, and then just get off to the races. But let's get back to this time lapse. Here you can see it's bought the bottom. It's really rode this down, excuse my poor English there. And then you can see where unit cost is hovering. Look how hard it is to manipulate unit cost. We're changing it by dollars. I mean, that's great. We're pulling it down. But because we're so far into our bag system, capital stage 8, we just don't have the ability to buy it like we did back at the beginning of moon mode. And so the drawdown is reduced. Look at this beautiful waterfall all the way down. Thought the markets were coming back. Bought the dip, and then continued to swing trade all the way back up. I love this accumulation style right here. You can see it waterfall down. It started to accumulate, it hit the very bottom, and then it started to accumulate on the way back up. I cannot speak highly enough of this new trade behavior that you're going to see when we release this version, which we are so close. I'm running these tests just to make sure it's perfect for everybody, especially here, this big, very expensive coin to trade. And so let's get back into it. The markets are dropping just a tiny bit. Short-term technical analysis picked this up, but look at that drop. Here's where the markets are. Here was the bottom. Yeah, here was the top. This is the tightest trading that you will see. And that's why I generally tell people come with extra steps. But you don't need all the extra steps in the world in our new version. Check this out, 1,000 steps. Here's the markets coming back up, and then they immediately drop. That's okay. That was the dip right there. As the markets oscillate, we nailed the dip with an upward swing trade. And then they started to oscillate again. So we just started getting into it. And that's okay. Look at these like very structured buys, by the way. I think that's a very funny screen. And it even waterfalled down and continued the channel perfectly. And then here, I'm going to pause it. Look at that swing trade. It thought the market had a chance to come back up, so it spent a couple bucks right there preparing. It didn't, and so it waterfalled down. Right here was a hard-fought moment where it thought the markets might be bottoming out. It didn't, so it waterfalled that all the way down, and right there. So this bottom buy right here is what it thought was going to happen right here. That's why you have this buy right here, is it thought it was going to bottom out, but it actually hit the bottom, and then it came back up, and it tried to swing trade on the way back up again. Here the market has gone on a nice recovery. It's really coming back up from that dip we bought, but you can see you can't even see the unit cost line anymore. Why can't you see the unit cost line anymore? That's because the charts have automatically zoned in on what's happening. So here at the very bottom, it's seriously negative 5.5, and then all the way to the top, okay, it's 0.5. There is 0.6% market travel here. This is the tightest trading. This is why when we say sub percentage, we literally mean it. We are inside the percentage, absolutely eating every oscillation. And that's one of my favorite things about Machine Gun. Anyways, moving on. You can't see the unit cost because the markets have got so tight that it's just hanging out up there. And you can see unit cost right here. Okay, you can see how far we're off. We're about 0.5% off from being able to return our entire hand. And you can see this bag value is starting to grow, which means how much we can spend is continuing to get smaller. And you can see risk tuning constantly flipping because the average price of this asset is right here in the middle. So sometimes like this one was above, and this one's below. And you can see it just constantly changing the trading limits. Here you can see it hitting these dips again and then trying to swing trade. It's not sure which way these markets are going to go because they're so tight. And then boom, market starts to run a little bit, starts to oscillate back up to its current all-time high. You can see over the last hours, that's about as good as it's going to get. It's going to hit a resistance level here, and then it's going to come back down. Beautiful waterfall. Bought the heck out of the dip on the wicks, and then it's going to run back up. Notice how we can't even see unit cost yet because these markets are too tight. Unit cost is, 0.1% up here, and it just can't draw the line on the screen. There it is. There's a hint of it. And then we're going to go ahead and just buy it after a little waterfall there, and we're just going to keep accumulating. Look at this bag penetration. We are over 95% penetrated on this bag. That utilization is amazing. You can see how it really doesn't want to stop spending, and it draws down how much it's spending at any given time as you get through the bags. And this is very dynamic. I could go on forever about how it selects these 20 different ones, but the fact that it even has the ability to layer orders makes it pretty sophisticated. And so here it bought the dip, it waterfalled down, it bought the dip, it's attempting to swing trade on the way back up, and here we are tickling unit cost again. Will it actually ride enough for us to bring back everything at a profit? Well, we're about ready to find out. But as you can see, it literally buys right on the line. It is not scared to try to accumulate before that next oscillation because you are so close to unit cost. So this entire time, all this buying you've been doing has managed to get unit cost down this far, which means it takes less of an oscillation to bring your entire bag back home. Now, I actually want to pause this. See how this is in capital stage 10, our last capital stage? If you turn on flipper mode, this entire time it's in the last two capital stages, it would have been making flips. It would have sold here, it probably would have sold here, it would have came up and sold here. It would act just like moon mode, but it would only act like moon mode with quote that it's accumulated since getting into flipper mode. And so as the markets would ride back up, it would continue to flip your bottom assets. And so it's making money for you. What's that doing? It's pushing unit cost up because you no longer have this amazing drawdown of all this quote you bought at a really good price since it flipped it on its way back up. And so this is great if the markets have depressed a lot, because you're going to sit there with the last bit of your bag and make money as it oscillates at the new accepted price value. But you're actually pushing the unit cost up as it does that, making it harder for DCA and close override to bring all your money back home. And this is a huge trade theory, it's a discussion to have with people where there is no right or wrong answer. It's a different strokes for different folks. Some people love flipper mode. Some people run moon mode into flipper mode and they never run DCA mode. They never get a close override to occur. Other people only run in DCA mode. This is just really up to how you feel about trading. But because you can completely customize machineGun to do whatever you want, the option is yours. In this test, you're not seeing all these little cheeky flips because there is no flipper mode activated right now. And so you're getting that 100% drawdown from moon mode to DCA mode. And so while traditionally moon is 0 to 40% and then DCA is 40 to 80% and then flipper is 80 to 100% of your bag, here it's 50% moon, 50% DCA. And so wherever you ended when you flipped into DCA mode, it has the exact ability to do a 1-to-1 buy down or a drawdown on your current position. And it will do that dynamically depending on where the markets oscillate. And so there's some complex behavior there that's often missed, that I really wanted to talk to you guys about and showcase off in the newer version. So let's get back into this. Here we are just riding unit cost. And you can see it's attempting to buy every last little dip, making $3.75 purchases because the asset is overvalued. Look at this. It's above the average price of Bitcoin right now. And then boom, in this dip, it fell back down. And all of a sudden it's spending 7.5 because the risk tuning changed the order size. So here it is, it rode down and then it thought it was going to just get right into a swing, which is why it's trying to buy right here on the top of the candle. And then it hit this beautiful wick. But look at these wick hits. These wick hits are right where it was trying to recover. And so machineGun sees this channel and it just wants to accumulate. It wants to accumulate so hard to the point where you get these wonderful buys on the wicks. Anyways, let's see what happens here. Markets continue to oscillate. And now we're actually getting close to being able to make an exit at profit and bring some money back home for all the effort we've gone through over the last day. Because you might see our profit. Let's just pause it. The profit stayed at 1976 for a very long time because it's been in DCA mode. So let's see if it can't bring some money back home. You see the markets are oscillating up. It's not even 0.25% above unit cost yet. Here is a beautiful run up. Now we're going to start making some money. There is the close right on the wick, and then it started to buy again for the swing trade. I'm going to go ahead and refresh the screen here and see what actually happened in this trade. Okay, this is a great spot to talk about this. You dropped the entire bag here at 7:02 in the morning. Right there at that wick, almost the absolute peak of that wick. You dropped your entire hand. Remember how long we oscillated before there was any market run at all? We were just dancing with unit cost. And then look at that. These wick hits were the last ones I was talking about. The markets ran and it dropped its hand right here. Why did it drop its hand here and not here? It thought the market had a chance to continue to run. It noticed the market was starting to decline. The market gave it one last hooray and it picked right here because you have to keep in mind, it couldn't see if the markets were going to go this way or that way. It's basing all of its stuff off technical analysis. And this is when it wanted to pull the trigger. Also, check out this market distance. This is 0.7. It dropped all the way to 0.4 and it reaccumulated. And it's already back in moon mode, thinking about making exits right here. I love it. I love it. But let's get back on this. And so at 7:02 in the morning, you can see it brought back your entire bag. It brought back the entire bag at 0.58. That was pretty much the max possible extraction. You can see that wick hit is beautiful. And then across $4,700, it made you 27 bucks. And so over here, We've been running almost 3 days because there was an entire day of accumulation in the middle, and it was able to pick up literally more money than it had made in its moon mode for that time period because it waited to get the best possible return in DCA and closed mode override. Now, when it did that closed mode override, it was considering long-term technical analysis, which is why it didn't exit here, it exited here. Because look at this analysis, it went through the roof right here. So this is a time period where we turn back on long-term technical analysis, and then as we emptied our hand, we got right back into the short-term technical analysis and started buying the dip again. This was the best spot to exit. Could it have waited and ran down and then came back up and managed to get just a little bit more somewhere around here? Yeah, it sure could have. Maybe the markets would have dropped. The analysis thinks the markets are going to drop, and it already started to drop from this run. And so it wick sniped right here as the spot to bring back home everything. And once again, this is risk reduction at its best. Not only did you completely eliminate all risk from your position, bring back every last dollar, make money doing it, close the out of position orders on quote that's above unit cost. Not only did you do all that, you hit the wick at like the most impossible wick hit. Right there's where it stopped. It trailed down and got right there. Absolute beautiful DCA into closed mode override return of your entire bag. And then boom, drops. Because we're back in moon, we can spend a ton of money. And so it's already got $50 back on this next run up. And you can see risk tuning, 1. I told you guys it would be 2 in moon mode if the asset was below historical price. Well, the markets are running up. It's above the historical average of this price. So risk tuning 1 cuts this down. Doesn't let it spend a ton of money because this is risky money to spend. Here's the stats screen. Let's go ahead and look at this for a second. 735 trades, 651 buys to 84 sells. We won every day, although there was a day where we just basically accumulated. We were in dollar cost average mode. You can see how much we total accumulated at the end, the price that we were working with. Here's today's profits from the close mode. Yesterday we just bought, so there wasn't profits, and then the profits for the last 3 days. And then you can come down here, you can see there's 0 fuck up trades. We never took a loss. Our biggest trade was that dollar cost average return. And then if you average that out across the number of trades, we've managed to machine gun 6-cent trades. Like 6.5 cents over and over and over and over has got us to 47. Actually, this graph, if I unpause it, this graph will populate, and that's some good data. Let's look at this data. So you can see moon mode, buying, selling, loving it. Dollar cost average mode just started to really work down its bag, and as it started to work down its bag, it didn't have as many funds to make more trades with, and so you get to see the nice curve of riding its hand out. And then as it got back into moon mode, you would see these trades per day explode again, and it would go straight back up. And you can see the weekly overview. Look, that's when we were just rolling in moon mode. This is coming all the way down through dollar cost average mode, and then this comes all the way back up when we closed our hand. Down here, you can see the day-by-day breakdown. 5-1, we stall out. 5-1 because we spent the entire day dollar cost averaging down. Boom, up to 107. Why did we do that? Because we finally had a chance to exit the market and bring everything back home. And so this was some cool data. I just wanted to show you guys what this screen looked like and kind of walk you through why it looks like this. I love the 0 fuck-ups. I love the average profit and loss. I understand 6.5 cents may not seem like a lot to people, but we did 735 trades. It starts to add up pretty good. All right, so that was the 3-day time lapse. Now let's get back into the new settings menu because I would love to show you guys what the new version looks like. Here in automatic management, you just have update version and your investment level. This is the only setting required to run machine gun. Type in how much you want to spend and start trading. If you're upgrading from an older version, you'll click this and you'll save it and hit trading, and on its first cycle it will bring you into the modern version. It will override all your non-mission critical settings. What does that mean? It will not change your investment level. It will not change a couple very critical settings down here like stop trading after next exit or ignore trades before. It will keep these settings, but it will completely bring up to date the rest of the strategy. Now these are all new. Disable notification spam. This is the notifications that keep popping up on the bottom right hand side if you just leave step grid hybrid to it. This is the order bubble spam. This fixes the trade orders on the chart screen so you can see what you bought and what you sold and nothing else. This changes the instance name. You can more easily find Machine Gun and see exactly what tab you're in. If you're one of those people that keeps a billion tabs up, this is really handy. We already walked through the minimum partial quote balance as a way of returning your entire hand when inside moon mode. Here's the exchange rebate. This is what you get if you're a Coinbase One subscriber. They give you 25% back on your trade fees. But given they are the most expensive place to trade in the history of cryptocurrency, that's the least they can do. That doesn't really help, but it's something. Down here in risk management, brand new settings, okay? Automatic risk. You can just pull this upwards. Say you put it at 200, you will trade twice as risky. If you had 5,000 steps at 100% and you put it at 200%, you now have 2,500 steps. It's just that simple. If you're one that can do some math or you're into math, you can come over here to Manualist. Look at that tooltip. So long. I put a whole library in here. Anyways, you know exactly how many steps you'd like to run at your minimum volume to sell for your unique combination of your exchange and your pair. You can come in here and dial it in. This run was at 1,000, which I consider to be getting up there in the risk. I thought it was a very unique run to run for you guys. Also, here's the new trading phase weight setting. Here's a great screen that explains 10% versus 5%. 10% is the standard machine gun setup. You can see by the time you get down to phase 10, you only have 200 steps. If you were to try to increase this, you would actually calculate out a number at negative steps. You would not be able to run the strategy. So 10% is where we max out, and this is what we've always run. We love those heavy purchases. But for everybody who is running machine gun and they're not intending to run at a high risk, let's just say that their investment level for the asset they're wanting to trade leaves them at what we consider high risk, boom, we automatically come in and we turn 5%. The setting for this is auto. I wanted to show you guys traditional 10% heavy trading. I thought it was a great test. But if you would have clicked auto in this one, it would have given you 5% weights. And you can see at phase 10, you either have 200 buys at phase 10, or if you went to a 5% trading phase weight, you would have 1,100 buys at phase 10. You can see how this greatly extends your runtime, which means all the users out there who are stuck in high risk, not by choice, they don't want to be there. That's just they want to trade an asset and they don't have enough money to get out of what we consider high risk. You can come in here, manually turn on 5%, or if it's just the auto settings, it will do it for you. You don't need to touch this. And you will be running at 5% trading phases. Your runtime goes to the moon. Your profits go to the moon. I've really been working on this concept for a long time to make sure that everybody who can't afford to make 2,500 steps can still use machine gun and use it really well. I disliked all the years where people were saying that this is an investment heavy strategy. And so I wanted to try to make changes that could bring this down and make it to where it's not an investment heavy strategy. This change, this 5% trading phase weight, makes it good for everybody. You got $1,000 to invest, boom, 5%, you're off to the races, machine gunning really hard, but you're not blowing through your bag immediately. I can't speak highly enough of this. And if you're looking for a way to reduce risk outside of increasing step count, so let's say that you want to run, 2,500 steps, but you don't want to run a risky 2,500 steps. Well, risk is based on step, right? No, come back in here, change this to 5. Now you're going to run forever at 2,500 steps because you're not allowing it to spend those big dollars at the top trading phases. You're significantly cutting down how much it can spend. But because you're still giving it access to all 10 trading phases, it can still layer orders appropriately and start doing maximum unit cost drawdown like it does at 10%, but it will do the same math at 5%. You just have less to work with, so it will draw it down slower because as you can see, it goes from a maximum phase 10 order of $10 to $1.81. That's a huge difference. That is so good for penetrating market depression. You 100% want to have 5% if you're at all worried you don't have enough steps to last in your current market. And then, the accept high risk trade. This is just if we automatically detect that from your unique combination of investment level, the exchange you're trading on, and the pair you're trying to trade, that you are at high risk, we put a stop on everything. and we put a warning prompt in the console, we put it in the UI, we put a big red light in the UI just to let you know, hey, come back in, double check your math. Just make sure this is something you want to do and that you haven't accidentally set yourself up to trade at high risk. This is just to try to help users out, because back when we first launched, we had a bunch of people who misunderstood the terminology, the nomenclature, so to speak, and ended up trading at high risk even though they didn't mean to. And so we put this in there just to help people. If you want to trade at 250 steps, please, you're welcome to trade at 250 steps. Just click this on and it will let you trade at any low step count you want. Moving on, you can see cooldown management. This is now, you can put this on auto and it will automatically change depending on what your risk is. And so it comes on auto by default. You can see at highest risk, it's going to go ahead and have a 15-second cooldown between orders because it's trying to prolong your bag so that you can't spend as much in any given drop. And then the second you achieve a normal risk, it just goes back to 5 seconds. We're on rest here. We're not on WebSockets in this test. And so you can lower this to, say, 3 seconds and still be at 1,000 steps and get that real quick, aggressive machine gun action in the lower steps. You do not have to accept 15 seconds as a cooldown on either of these, even though it will come auto like this. You're more than welcome to come in here and click like 3 and it will run a 3-second cooldown. Now keep in mind with the REST protocol, if you're not running WebSockets, REST will take 5 to 10 seconds, probably closer to 10 seconds to return any data from the exchange from what you've requested. Once again, greatly depends on where your server is located and how quick your exchange is and how slammed they are at any given time. But let's say it takes 10 seconds for the rest to come back. Okay, well, Machine Gun's going to run a cooldown for 3 seconds after the next information has been returned. So your actual cooldown in this instance is probably closer to 13 seconds. And so if you're in WebSockets mode, which is why these are pretty much built, because REST has got a long enough cooldown on itself, you're going to want to dial in until you are literally just hammering it too quick. And so 13 seconds in rest, that's fine. Hell, you could put this at 1 second in rest and be fine, as long as you didn't mind the aggression that you're getting out of this. As you can see, we generally recommend people keep it around 5 seconds. And why is that? Well, if you're going to rest for about 10 seconds and then you have a 5-second cooldown, that meant that you made an order and then 15 seconds later you can make another order, which means that you can make around 4 orders a minute. Do you want to make more than 4 orders a minute? Turn it down. Turn on WebSockets. Do you want to make less than 4 orders a minute? Turn it up. This is another customization point that I wanted to point out to you guys, especially if you're not in REST and you're running WebSockets. That's huge. Mode management, new settings in here. Look, you can now choose the technical analysis lines for what you want to follow. So this is close mode. When close mode turns on, signal. Would you rather follow the plot line? Just click plot. Follow that instead. When close mode override turns on, would you rather not have any long-term technical analysis? Come on here and just turn it all off. Boom. You're not doing any long-term technical analysis now when it comes to close mode. And then for tax purposes, heaven forbid, you want to sit there and switch to break-even price instead of unit cost, you can even do that. That's a very complex conversation. I really don't recommend people do it. Here's tuning management. This is risk tuning. And so you can see, as we talked about, greatly impacts how much you're spending. These are all the normal settings. There's not a lot of new stuff in there until you get down here to skimmer, which we've already looked at. Ton of stuff in skimmer. And then look at this. You come down here to this long-term technical analysis sections. These two are short-term technical analysis, and then these are long-term technical analysis. You can come in here and once again change everything. How far does it look back for hindsight? This is the actual calculation used. Do you want to change the point at which it has to cross in technical analysis before it to be activated or deactivated? Here you go, 0, when it crosses the 0 line. If you put that at 20, it would have to go positive 20. If you put that at negative 20, you'd have to go to negative 20 for the switch to happen. And you can actually see over in CMO, we do run 20, which has profound effect changes on the behavior of the technical analysis. You'll want to be very careful with this. You can see down here, this long-term technical analysis. Yeah, you can just change it. You just say, I don't want that line, I want this line. and instantly machineGun will just work with that different technical analysis. That was never a feature before. It's a brand new feature. You can see you can come in on both the buy and the sell side and change what line. We do this automatically. There are changes between skimmer mode, and then there's changes between close mode, and then there's just changes to normal analysis. While you can come in here and change these and it will be completely respected, we already change which line the technical analysis is following quite often, depending on what you're trying to do. I just wanted to showcase stuff that's making it into the script. I hope you enjoyed this run, this 72-hour run. Profits were spot on. Like, you could not have made better exit locations across the board. I think if you go back and you review all of the exits, that you would find those are pretty much peak. And so the amount of money you made across that 72 hours just comes down to how much do you pay in trade fees, and then how many steps are you running? How aggressive are you trying to stretch your money out across? Because if you would have switched that to 500 steps, maybe you could have acquired so much that you could have exited earlier and pulled your entire hand back in DCA mode. Or maybe you would have went bagged and not been able to prolong that entire period. Because mind you, over 3 days, we never went bagged. It always had money to work with, even though it was definitely getting to the last 5% of its funds. And so if you would have run at 500, maybe the profits would have been insane. Maybe you would have got bagged. 1,000, the profits were spot on because it bought every dip and it sold at every peak. That's what you could have earned there. At 1,500, it would have had dramatically more room to continue to work to pull down the unit cost if Bitcoin had not swung back up there and allowed us to exit our hand, which meant if the market's depressed significantly after that point, you would have still had tons of bag to pull down unit cost with. This is why we recommend people start with like 2,500 steps, and then people in the community seem to love 5,000 and whales run 10,000. Why are they doing this? They're reducing risk. They're literally increasing the amount of market depression that they can ride inside machineGun. And those whales out at 10,000, there is not a crypto related crash I've seen in a while that 10,000 can't buy itself out of and get you trading pretty much right back at the new defined price immediately. Hanging out at 10,000 steps, that guy's sleeping good at night. That guy is not looking at his bot. That guy is never pulling up his charts and caring what they say. All that guy is doing is getting those deposits of how much money he's earned and loving it. And so reducing your risk but increasing your investment level is key to becoming a full-time machine gunner. It will work great at low investment levels. You can see that new 5% trading phase I'm talking about. No problem. But if you want to be that guy who retires and does not even need to look at his trade bot, increase steps. Stop being greedy and increase your steps. Prolonged profits, non-stopped profits, are always better over the span of weeks and months into years than really greedy, bagged, and trying to cycle through this I run low step counts. Yes, you make more in any short-term trading cycle with a low step count, but the second you cannot handle the market penetration, even with all the tricks we do, you're going to occur a bag status. And at that point, you're going to have to invest more money to drag yourself out, or you're going to have to pull the trigger on a stop loss, or you're going to have to wait for the markets to come back. That is not a position you want to be in. We want to make sure that we can manipulate unit cost at all times. That is why I say that if we hit bag, like a bagged status, it's a failure point in my strategy. The algorithm should do everything in its power to constantly prolong and manipulate the markets. And so I'm always telling people, run more steps, because I want you to have the greatest runtime possible for the greatest amount of market manipulation, i.e. lowering unit cost, that is possible. That's why I'm making those recommendations to people. But anyways, look, this was a 72-hour time lapse on Bitcoin of all things, the slowest trading coin, and then with 1,000 steps, which is high risk. That's how the new version handled it. I can't wait to drop this for you guys. I'm going to go ahead and blow up about 10 more markets worth of testing, and if we get the same exact performance across all my different tests, then this will be the release candidate that moves forward. I can't wait to get it to you guys. Thanks for listening to me, and just know I love you guys. Cheers.